Hi everyone, let's focus on this impulse over here, this structure in this video with my new low time frame and even very low time frame scenarios, including potential trading setups. Starting on the medium time frame though, as I think it's important to get a little bit of a bigger picture where this then is a 1, 2, 3, 4 and eventually now working on wave 5, and then eventually the end of this wave 5 would be the end of a high time frame wave C and then the even higher time frame wave X, as mentioned in my previous video with the very high time frame counts. We would then expect a move to the downside over here. An important resistance is 28.8k, as that is the high time frame range value area low, and the target for a wave 5, if this is the blue wave 3 and this is the blue wave 4 over here, is the area that we are in right now. These fibs over here are classic fibs for the target area of a wave 5, the 1.618 and the 1.236, taken from the high of this wave 3 to the low of wave 4, with the 1.618 being 28.2k. Also, the 0.618 is basically at the same level, taken from the low of 4 to the high of 3 to the low of 4 over here with the trend-based fib extension. So all of this makes this a quite interesting area, and as you can see, if I open my target boxes, we are actually currently ranging in a target box, which is a little bit bullish for maybe a bit more upside. But you can see there are some target boxes over here as well that will provide resistance if price will go to the upside. My other scenario on the medium time frame is a more bullish scenario. In this case, this impulse from the lows is only wave 1, and we would then still expect another wave 2 to the downside, then a 3, 4, and eventually a 5 for much higher prices, unless this would become some sort of an ending diagonal. So if this is a classic 1, 2, 3, 4, 5 with a big extended wave 5, and actually I do have to say, now that I say it, if this would be an extended wave 5, so on the high time frame, this then being a 1, 2, 3, 4, 5, and because wave 3 is already extended, it's very rare and unusual for a wave 5 to be extended as well. So that I think is very important Elliott Wave knowledge for you guys, that I do not expect this wave 5 to be extended, and therefore this scenario is my alternative scenario. However, it might not be as extended if this becomes an ending diagonal, which is more of a sideways structure and doesn't necessarily go up like a true wave 3 after a 1, 2, and then 3 to the moon basically. Instead, it's going to be more of a sideways structure where this is then a wave 1, 3 wave 2, 3, 4, 5, something like this eventually, maybe even reaching the high time frame range point of control over here, which is still a valid target for a high time frame wave C at 38.7k. However, this still is my alternative scenario. The potential trading setup in this scenario is basically entering the shorts where we are now, stop loss somewhere above. Of course, we are in a bullish market structure, so educational only, and make sure you have a proper strategy and entry requirements to then trade it to the downside for the most common target over wave 2 being the 0.618 and the 0.66, the golden pocket over here. That makes me think that in the bearish scenarios, the trading setup, of course, is actually the same, which means entering somewhere around where we are now, laddering in some shorts. However, again, bullish market structure, this can push up a lot higher still, but eventually then trading it to the downside for a much bigger move, as we don't expect a wave 2 and then 3 to the upside. Instead, we expect much lower prices to be made even below 15k. If we then go to the lower time frame scenario, this is my low time frame, not yet the very low time frame scenarios, but at least the low time frame scenarios. I updated this a little bit. It looks a little bit messy, gotta say, but what we're actually looking at is the following, where this is a green 1, 2. Then eventually this might be the high of a green 3, or the high of the green 3 has yet to be made. Because if we look at the volume over here, the volume has been increasing with this move to the upside, which is very common for a wave 3. And then eventually this is the highest peak of volume. And that is very nice. So then this can be the potential wave 3 with the highest volume of this impulse so far in wave 3. Then we can see volume declining in a potential wave 4 over here. The volume declining when price is going sideways for then a push up for wave 5. Or what might also be a possibility is that this green 3 is yet to be made, 5 yet to be made. This blue wave 3 goes over here. And we are now working on a blue wave 4. And the difference is that now inside this blue wave 3 now has the highest volume peak that we made so far, actually both of them. So this is interesting. Also, this wave 4 has a more shallow retracement, and I think I actually have to remove just a few things to get things a little bit clear. So give me, there we go, a little bit better view, let's say. What you see on the chart right now, before I start messing the chart up again, is these are the same fibs as the medium time frame. This is basically the wave 5 target area that I mentioned, with this then being 3, this 4, and then looking for a wave 5, which is this area over here, or even higher, of course. The lower time frames you go in Elliott waves, the less predictable it becomes as well. So now we then have a 1-2-1-2 setup in blue. Now if we then pull potential wave 4 fibs, from the low of this wave 2 to the high of the wave 3, you can see that these are the most common fibs for a wave 4 in blue. So this is in blue. And as you can see, what is interesting, the most common retracement for wave 4 is the 0.382 and or the 0.5 fib. Now candles should usually not close below the 0.5 Fibonacci, so that's definitely an invalidation. Of course, the potential trading setup would then entering in this support box, because there is a bit of confluence here with the daily naked point of control, time naked, the 382 lows over here with a little bit of liquidity. So that could be an interesting area for a potential low of a wave 4 before then moving up for the blue wave 5. And that basically is gonna bring us into a bigger range, because we then have a 3, we have a 4, we have a 5, we have another 4, another 5, and then move to the downside. So it might feel like maybe even an expanded diagonal, for example, or a bigger range, but this is something that we do have to take into account at the moment. And then of course this green wave 4 is going to be over there. So this is one scenario on the lower time frame that I'm at least keeping my eye on, with this area being interesting for a potential trading setup, of course. We can also continue to the upside, and then we just move the 3s, because of course we are in a bullish market structure. Volume has been increasing over the past couple of days, so who knows, maybe we don't get this retracement to the downside and we just keep pushing till eventually we are going to get that moment. However, it is weekend, and weekend is always quite famous for its wave 4s and also for its ranges. So yeah, definitely something to keep an eye on. And if this is wave 3 over here, and this is wave 4, and the green wave 3 goes over there, then the fibs will change a little bit, because now we have to take it not from the low of the blue 2, but basically from the green 2. And then you see that the targets are quite similar. Actually messing up here a little bit with my buttons, but then there we go. So still the 382 is in the blue target box, the 0.5 just below. So the trading setup does not really change in this scenario, which I think is important to know as well. So let's go to the very low time frame scenarios then. And I have multiple very low time frame scenarios, and I will tell you which ones I believe are a bit more likely, which ones are unlikely. Now I do have to go to the 5 minutes, and I'll repeat myself that the lower time frames you go, the less predictable the Elliott waves become. So the first alternative scenario that I have on the chart right now is that this move over here is a 3-wave structure in a WXY, which then brings us to an A. Then eventually this is a 3-wave structure followed by another 3-wave structure, and then we're looking for a 5-wave structure in a B. So then this is a 3-wave A, 3-wave B, and then eventually we expect to move C to the downside, with then inside the B, this being an expanded flat. However, a problem with this scenario is the volume, because if this is an expanded flat in the B, usually you want to see volume in wave C because it's an impulsive move. But as you can see, price is moving to the upside, but volume is nowhere to be seen except for this one candle over here. But yeah, anomaly, but then the volume is not there. So yes, I have this scenario on my chart just because, but so far it's not really a likely scenario because of the volume. Same scenario over here, just different pivots, that this is a WXY, and now this would maybe even be the end of a wave 4. Of course, when we consider our other scenarios, like the low time frame scenario we just mentioned, this retracement for a wave 4, even in blue, is not low enough, as the 0.236 should be a minimum target usually for the wave 4. However, you never know because Bitcoin crypto volatility, but this would mean we would go up for a wave 5. But then again, so far volume has not been on our side, as the volume has been going down. But that doesn't mean price cannot push to the upside, as this could be some sort of a diagonal as well. And in a leading diagonal wave 1, if this is then a wave 1, in a leading diagonal, volume is going down. So Elliott waves, not easy, a lot of volume included, volume going down as price going up, but if this is a leading diagonal, that is actually a very common pattern. But still, looking at where price is now with a potential wave 4, this is again an alternative scenario. Then I have a alternative scenario once again, which is a move to the downside in a 1-2, 1-2, expecting much lower prices. A validation is then if we take these highs, and this is also a alternative scenario. It only becomes a preferred scenario if we really push to the downside very quickly, because we then expect a bigger wave 3. But as we can see right now, price moving a little bit to the upside as well, and volume has not, it's very low. Like this whole range, basically volume has been going to the downside, as you can see, which is very, very, very typical for a wave 4 as well. Besides the fact that this would be an impulsive structure to the downside, which then means a wave 4 zigzag is a possibility with an ABC, which is also more rare in a wave 4, as expanding flats or flats in general or complex combinations, Elliott wave wise, are much more common in a wave 4 in general. Then we go to a preferred scenario that I have over here, which has two channels. I have a straight channel over here, and I have a diagonal channel going down. And that has to do with the WXY. So over here, this then is a W followed by an X wave and followed then by a Y wave, where the X wave has the targets, as you can see on the chart right now. These are the most common targets for a wave X, all of these, which makes it quite difficult to trade a wave X to the downside in this case, because the potential trading entries can be kind of everywhere, which makes it very difficult to manage. And even a wave X can also go above the origin of a wave W. If this is a W, it can even go above all the way till the 1.38 fib. So yeah, a wave X is always very difficult to trade, and something I definitely don't recommend if you're not used to trading Elliott wave, for example. Also, because of a potential wave X over here, giving a trading setup is not something I like to do, because we can as well push to the upside above these highs, or return, of course, over here. Yeah, yet to be seen, right? But at least a WXY is a sideways structure, either a diagonal to the downside or very horizontal. However, if we are in a bigger time frame wave 4, either the blue or the green, we still expect more downside to come, because basically the targets, again, are below the channel, as you can see. And then the final scenario that I like to show you over here is actually a very interesting one, and this is a expanded flat. And I love expanded flats because they tend to trick people in potentially then being a wave 4 or an impulse. You know, we take the highs, because in an expanded flat, this is then some sort of a 3-wave structure over here, followed then by another 3-wave structure, or like this, of course. So if volume picks up, might be interesting, or this is then the only first part, second part, third part. In an expanded flat, most common target in between the 1.38 and the 1.236, which is 28K and 28.1K, one should say. If I open my target areas, you can see, however, I do not have a specific target area here, but it's nonetheless an interesting target for then eventually a wave C to the downside. And the wave Cs tend to be impulsive structures as well, and that might get us into this blue target box. So a lot of interesting stuff going on. As mentioned, the lower time frames, you can also see it because of the scenarios over here. It's very confusing. I do have a couple of preferred, as I mentioned. This one, for example, a WXY is a preferred for me. Also, the ABC is preferred. So basically what I'm looking for is eventually downside. Again, no financial advice, guys. Like, of course, price can push to the upside. If we look at the CVD at the moment over here on the 15-minute, this is, you can see the cumulative volume delta, the lines over here, and the divergence basically could be like higher low on the price and a lower low on the CVD is a bullish divergence. And what we can see at the moment is if we take this candle over here in a very bullish environment, you can use these candles. It's not preferred, but you could. What you see is this red candle over here has in yellow a low. However, what you can see based on my cursor, my horizontal cursor line, is that over here, these lows on the CVD are lower, as well as the low that we here made as well, are lower than the one that we made over here. So a little bit of bullishness. Same on the blue, as you can see as well, a lot of blue line below my cursor over here, which hints us a little bit at some potential bullish price action, but at the same time, and that is the confusing thing about wave 4, guys, you can also see that over here the yellow line with this structure is actually peaking and is higher than the yellow line of this high. So we have a lower high made but a higher high on the CVD. So this is for me a very difficult trading area, and basically almost like a no trade zone, because it's so complicated to trade this current whatever we're in. It's important to wait for price to show its hands. On this channel, we don't catch knives, we don't YOLO into trades, and we don't FOMO into trades. We wait for price to show its hand, and then we react accordingly based on what price is showing us. I have shown you some very low time frame scenarios, alternative scenarios, and the preferred, this one and this one, preferred scenarios as well. We will see what price will do, and then my next update will be later today at 7 p.m. Central East European time. So I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing. Have a great weekend, and I'll see you then at my next video later today. Bye bye.